Good day and welcome to Crypto Monday Zoom, 5th of August, Global Thought Leadership. It's featured guests on Wednesdays. It's by the community, for the community. It's all about thought leadership, their journey, their trends, technologies, their passions. It's about stimulating the thought and conversation around their perspective on the industry and their journey in the industry. It's not about chilling, it's about education. And it's about helping our community to learn and to earn and to connect. And is anybody here that would like to make an announcement, a company launch, product launch, a big deal that you've recently done or capital raised, new job you've got, if you're lucky? Put up your hand and let's hear from you. Right, Joseph, rock and roll.
Hi, everybody. This is my first Crypto Monday. Love the community aspect. Actually, a big proponent of it myself. I don't have a crypto background. I've only gotten into the space in the last 9 months, I'd say. But formally, I am a technologist, two-time founder with notable exits
You
in
can
media,
just
Oops.
Whoops.
Go
media
on.
and philanthropy.
Mute.
And I've really taken an interest in crypto now. So because I'm a senior software engineer and because I'm very passionate about where the future of agentic commerce is headed, I've joined the Linux Foundation's X402 Technical Steering Committee.
Aha.
X402 is will be the rails that the vast majority of agentic commerce will conduct business on in the coming months or years. Very excited about that, and especially excited about that as it relates to helping charity and causes, because my previous startup is Member for a Day. We've raised multiple millions of dollars for very credible charities through the game of golf by auctioning off rounds at the top 100 and giving the proceeds to them. That's
Great.
it. I want to meet you guys. I want to just
Thank
understand
you.
the
That
community
was
and
lovely. Thank you,
appreciate it.
Joseph. And yeah, we've just come off the Decentralized AI Agent Alliance's agentic commerce call, and there was lots of X402 in there. So yeah. So the X402 versus the card associations. Let's see. Maybe Alan, I guess, speaker today has a couple of insights on that too.
Very interesting.
So
I'm in good
anybody
company.
else? Sorry, Joseph.
Just saying I'm in good company, and that's awesome.
Great. Anybody else with an announcement to make? Sophia emailed me. Are you here, Sophia?
No, I don't see her here.
Right. Good. Well, let's carry on then.
Lou, I couldn't raise my hand, but I just want to say hi. It's
Good.
my first Crypto Mondays. My big announcement is that my protocol was acquired in June. So
Oh, wow.
I was head of ecosystem for a Bitcoin finance protocol, Acre, and I'm on vacation in the mountains right now. Pardon my cabin location, but just enjoying the moment and super excited. I met Lou at Bitcoin Vegas, and now that I've exited my first startup, I've got a lot of time to focus on this. So super glad to be here, guys. Thank you.
Brilliant. Well,
Exciting. Who acquired him?
We're going over to Hyperliquid. We
Oh,
were
wow.
Bitcoin Finance. We utilized basically an orange kit to connect Bitcoin to the Ethereum network, and they bought the entire software development kit. They're going to bring that over to Hyper. So the company is called Hyper Surface, and the CEO is Monica. Love to, oh, anybody's interested in Hyper, I'd love to introduce you.
Perfect.
Congratulations. That's absolutely
Yeah.
fantastic.
Good seeing
And
you. Yeah.
Not
yeah,
going to
no
go
no
sit on the
shilling, of
booth,
course,
huh?
but I'm also pleased to meet all of you guys. I will not be going over. It wasn't an Accu hire, but it was just it's an amazing part for me because it's 3 years. I built all of the infrastructure. I built all the community hub. I launched us on Discord. I did all the Telegram, the Twitter, and all that stuff. So,
Amazing.
and of course, if anybody has any questions about that, I automated it all. So happy to share.
Very
Awesome.
I think we can use you at Crypto Mondays there, Nico.
It's such a pleasure, Robin, and everybody
Yeah,
here.
thank
I
you.
really enjoyed the meeting yesterday. I love your perspectives. Great group,
Brilliant.
great group. Thank you.
You're a champion. Thank you. Bruce.
Yeah. Let's see. I'm on my phone because I had a conflict with my desktop. So I just want to say that I just launched a community page of the DREC Alliance, and we're a 501c3 nonprofit that you can go to the websites rather than me regurgitating. But the three founding teams were from Hedera, from Algorand, and from Ripple. And so we're just a protocol standards organization that's trying to drive the adaptation of decentralized recovery of keys. And there's two parts of that. You have the owner of the secret, and it could be crypto. We are a non-crypto organization, but it's for the crypto industry, Web3, but passwords of any type, pass keys, grandmother's recipe. And then you have the helpers, and it's a quantum resistant platform that your keys are never in one location. And even if you have one shard, that they can't be hacked.
Terrific. You can leave a link to the community
Yeah,
page.
stick it in
Link
the
to the site.
I did. And also,
Yeah,
we have, by September 1st, we're going to have our first major announcement with an organization that's going to have a footprint in 40% of the United States. And we are agnostic. We're just a layer. You implement it in your app. But a lot of people on this call, the 4012 platform, payments, agentic.
Right. Leave it
Yeah.
it in the link
Right.
in.
It's there.
People
But
check
if
it out.
anyone has questions, let them, just email me at bruce@drec.org or
Stick it in the chat, Bruce.
thank you. It's already should
Good
be there,
man.
I think. Take care.
Thank you so much, man.
Yep.
Blair, fire away.
Yeah, hi everyone. First timer here as well. I'm joining from Navigus. We're a location intelligence company. So I'm just excited to learn more about the community and explore the intersection of the geospatial tech that we work on and crypto. So I'm here just more in a exploratory and understanding aspect. But since you were asking for introductions, I thought I would introduce
Brilliant.
myself. So thank you.
Thank you, Blair. Dimitri is OG, one of our very loyal people. Dimitri, up to you. Over to you. You can find
You're
the
on
mute
mute.
button.
Okay.
Okay, right. Well, Dimitri, when you find it, let us know. Thank you, Blair. Let's do that. Lower the hand. And let's carry on. Start a Crypto Mondays chapter. Any of you that are in a city that doesn't have a Crypto Mondays, please let us know. Lilia is going to post the links in the chat. Thank you, Lilia. Thank you, Alan and Lilia, for being my backups on this here. And then Agent Monda, I'm sure Lou's going to tell us a little bit about that in a minute. And so, and also our sister organization, Decentralized AI Agent Alliance, is really mainstreaming. What was blockchain was boring, and agentic everything is exciting. So we'll hear a little bit from him about that too. And then you can join Crypto Monday Zoom, where we publish these events. And then I think I'll do, well, let me just say, next week we've got Greg Kaufman. He's head of institutional sales at Grayscale. So we're excited. He's been a member of our community for many, many years. Fascinating, absolutely lovely person. And so, yeah, we look forward to having him next week.
Thank you. Looking
before I
forward as
go-
well.
There he is.
Hey,
There's the
Greg.
man. Thank you, Greg. And so over to Lou for a bit to just do an intro on Crypto Mondays, just a little bit of a background update before we go over to Alan.
Okay, so just real quick, we actually had our meeting. Apologize for the chapter leads that are on the call. We had our chapter champions meeting for all the organizers around the world yesterday. There's a couple quick slides just by the numbers. So now we're using Agent Monday really to manage Crypto Mondays today. So all the information on all the chapters is there. So we've got 62 active chapters in 59 cities. Those numbers are different because we have 4 chapters in New York, or with Bitcoin Mondays and decentralized AI and Wall Street, and that's across 26 countries. And the new cities that have launched just in the last number of weeks include Houston is this week, Medellin was a couple weeks ago, Crypto Mondays Zoom Europe. We're counting that as a chapter, as we count this as a chapter as well. And Crypto Monday Delaware, which was the 43rd Crypto Monday that I attended for the launch of that. And then there are 21 that are currently in the process of launching. Not all of those were launched. One of the things that we're really leveraging Monday for at the moment is the onboarding process and trying to increase the percentage of companies who we're able to work with, who actually do start a Crypto Mondays when they go into the planning stage. And so, number of different cities from around the world there. So we're excited about that. In Belgrade, Chicago, Marbella. So a lot going on there. And then Greg, Greg, who's the host of Crypto Mondays, the organizer of Crypto Mondays Atlanta, took a trip to Austin, partnered with Eliza in Austin for a great networking lunch there. And so it's obviously super exciting for us at HQ to see the individual chapters working together. And real quick, this is the homepage of Agent Monday today. We really have three audiences that we're trying to optimize the Crypto Monday experience for: the organizers, the community members, and our partners/sponsors. We've initially really focused on the organizers, trying to give them the tools to optimize the organizing of a meetup, growing their membership, engaging their members and such. And we'll be rolling out the first things for the members will really be around, in addition to some modules on Learn and Earn, but the focus will really be on Connect. And DIAS, as Robin says, continues to grow. We're now over 230 founding members. We have 2 general meetings a month, and right now there are 2 active subgroups. And that's my update.
Thank you, Lou. That's excellent. Let me just see if I can get back to my slides. Hold on a second. Oh, I seem to have lost them. There we go. You got it now? That's Alan on the screen, is it?
Yep.
Okay, great. So our featured guest today, I'm super excited to have Alan. Alan's an interesting person because he really comes out of, as you can see, Goldman Sachs, MasterCard, Sullivan and Cromwell, comes from a legal business background. He's held very senior positions in all of those. And now he's head of tZERO, which, it's completely transitioned into the digital domain. And I'm absolutely super excited to hear what his perspective is on, what his journey's been like, what the challenges have been like, how he's transitioned from that. And as you can see from the last point there, he's quite a clever chap too. And I actually had a very good interview with him before this, and he's just also a super nice chap. So a warm welcome to you, Alan. Thank you for joining us today. Thank you for giving us your time and sharing your insights with us. And his topic is why tokenize now, AI, DeFi, and the race to rewire financial markets. Over to you, Alan, and thank you so much for being here.
Terrific. Robin, thank you for having me on. I'm delighted to be here. I'm delighted to talk to you again. I'm delighted to connect with each one of your members. Thank you for the opportunity. Thank you for the time. Um, I'll put up a few slides on screen and we'll talk about the industry. We'll talk about some of the significant tailwinds and headwinds that the tokenization space is experiencing now, and in particular, how tZERO and its infrastructure fits into what is required in order for this asset class to continue to develop in a thoughtful, responsible, and fast way. A little bit about me first. I am the CEO at tZERO. I've been with the company for about 7.5 years. One of the fun things about being at a growth stage business is that you get to wear a lot of different hats. I joined as the company's first chief legal officer, and I built out the adjacent functions around it, so legal, regulatory, compliance. If you think of regulatory infrastructure as a service, as a business, uh, your critical capex, your critical build, apart from technology, and we can touch on that in a second. And of course, AI is making technology development less and less of a moat across a number of industries, including this one. But your critical capex, your critical build in that space are the regulatory capabilities, the licenses that you develop. And so for better or for worse, in tZERO and similar companies, legal and regulatory and compliance functions are the key kind of strategy delivery organizations in terms of building out the capabilities that are then offered and sold to your customers. And we'll get to that in a second. So I got to wear a bunch of different hats during my journey at tZERO so far. I was the company's interim CEO in 2021 and 2022 when we were fortunate to bring in the Intercontinental Exchange as a financial investor in tZERO among other folks who've been backing tZERO for a long time, including the venture capital arm of Overstock at the time, now Bed Bath and Beyond, and other institutional investors. At the time when ICE came in as a financial investor in tZERO, we were lucky to have one of the founding management team members of ICE join us as CEO. When that gentleman retired at the end of Q3 of last year, I took over the role. Before tZERO, I spent about 20 years in traditional financial services and other highly regulated industries with focus on technology, payments, capital markets, and M&A. I had executive roles at MasterCard in strategic initiatives or critical projects, technology and operations legal teams. I was an MD at Goldman in New York and in London. And I was also at a large law firm called Soder and Cromwell in New York and London as well. And so for me, the journey was not dissimilar to how tZERO has developed, where you are taking best of breed experiences with traditional financial services. And you're asking yourself a question, how can the digital asset ecosystem develop in a compliant, responsible, scalable way that supports the true promise of what we're trying to achieve, and that is kind of deliver new infrastructure for financial assets in that operates in the U.S., operates cross-border, supports a range of asset types, supports a range of protocols, supports a range of partners, and that's what attracted me to tZERO, because tZERO, didn't just ask itself a question in the beginning of, well, there are tokenized assets out there, digital assets, crypto, and what can we do about price action around these assets? tZERO asks itself a question that, assuming that that tokenization is going to touch every asset class, whether public equities, private equities, credit, derivatives. Prediction markets wasn't a thing back then, but people talk about that now. Crypto, of course, and stable coins. How do you deliver the kind of rails that would allow retail and institutional investors to touch these assets in a responsible way, but also to create and build different products and different experiences using this technology? And like most folks in this ecosystem, tZERO, along with other companies, initially focused on fairly niche environments where you were generally hoping, and I think hope is a good word, that blockchain tokenization, the technology part of just migrating an asset class in case of financial services to a single database layer with programmable representations of value sitting on that database. But the technology exercise of tokenization in and of itself can introduce liquidity into illiquid asset classes, can introduce price transparency, can introduce price discovery and transparency and other items. And of course, it can't. What can is market structure and tools and connective tissue that enables a range of market participants to coalesce around an asset or an asset class. But at the time, tZERO and others like it were mainly focused on niche private assets, the kind of raw exercise in tokenization without thinking about the broader market structure that supports financial services, and sort of running walled gardens with few private assets, a few some retail demand and some infrastructure, but fragmented infrastructure that's set apart from other people who are trying to do what we're trying to do in their own walled gardens. And as we looked at the company at the time of our leadership reset last year, and we looked in particular into the forces that are shaping the industry, and asking ourselves a question of what can we do in order to drive mass secular adoption of tokenization across financial services? Or put it another way, what problem can we solve? What service we can offer? Because there's a lot of things in this industry that are often solutions in search of problems. That has been the case historically. It still is in a number of instances. I mean, we can debate it, and obviously, today's solution in search of a problem could be tomorrow's product that everyone wants. But that journey has happened. But generally, um, reframing the question of what problem could we solve that is immediate and near term? And the answer was that as tokenization enters broader, deeper asset classes like public equities, like cash products and money market funds and kind of other types of credit, and a range of market participants, whether they're other broker-dealers or financial institutions, asset managers, um, blockchain industry participants, including layer ones, crypto exchanges, non-US market participants, unregulated fintech platforms, as they're looking to access this new asset class that is no longer limited to just niche private assets, without much activity around them, but liquidity, disclosure-rich assets that are now looking to tokenization to create new access points, new distribution points, new experience, whether it's around borrowing, lending, or others, or and custody, or others, fractionalization, multi-asset exposure that are available in DeFi world far more so than in the TradFi world. What do these market participants need? And I think the answer is that in part because most of people like us have spent time beavering away and building kind of niche closed loop marketplaces. It's independent asset protocol agnostic infrastructure that helps to support a range of market participants to access tokenized securities, or actually in a broader universe of tokenized assets, quickly, efficiently, compliantly, and in a way that allows them to deliver these products and services to their own customers without going through unnecessary build or buy exercises. So with that, I'll throw a couple of slides on screen, and we'll talk about kind of where we are now as an industry and how this infrastructure as a service proposition slots into it.
That's awesome. Thanks, Adam. That's brilliant.
So let's see. Folks, forgive me if I'm just going to. Is this good, Philip?
It's looking brilliant.
Terrific. So as as we think about the opportunity set in the marketplace, it's on autopilot, huh? There we go. As we think about the opportunity set in the marketplace, we are looking at secular tailwinds that are not outlining, but driving in practice a significant rewiring of the financial services industry to integrate blockchain technology and smart contract automation in various phases, whether customer facing or back office facing or somewhere in between, to move away from fragmented, disjointed, siloed ecosystem to something that is connected, that is faster, that is multi-asset, that is cross-border, and that is optimized for AI, agentic AI, and machine-to-machine economies. The opportunity set is huge. I mean, there are these numbers. The numbers we have here are probably fairly modest, but if you think about asset classes beyond public equities and beyond credit products, the denominator gets fantastic. And I don't tend to spend a lot of time on it. I think everyone understands that there's a significant opportunity here. And again, tZERO sits as a connective tissue of the tokenized economy with our very unique, vertically integrated, regulated U.S. infrastructure stack that supports tokenized securities, and increasingly a range of other tokenized assets with some other capabilities that we're developing. And we sit as a glue, as a connective tissue between traditional and decentralized finance across a number of asset classes, partners, protocols, etc. The forces that are shaping the industry, it's kind of a funny conversation. You go and you do these talks where you sit on panels and you sit on panels of people far smarter than you, and inevitably you get the softball question of why tokenize, right? It's fair, particularly if the audience is generic enough. And inevitably someone again raises their hand and says, it's to make things more liquid. Right. And it's kind of loops back to the earlier point I made about how this industry was sort of going a number of years ago. Um, to me, that's a wrong answer. Tokenization, in of itself, again, the technological exercise, uh, in and of itself doesn't make anything liquid, which is why the experimentation in the past of taking illiquid niche asset types, whether they're equities in private companies or 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 real world assets, and just by the act of tokenizing them, which is by the way the easiest part of the exercise, the technological. I mean, we don't have enough time to get into the guts of it, but the technological part of tokenizing records relating to an asset class is the easiest part of it. And it's becoming increasingly so. And there are a lot of great people who do it, including us. But it's that in of itself does not create liquidity. So, we'll get to some pieces of it that do. But the analogy was people were saying, well, look at crypto, right? Crypto is liquid, or at least it's perceived as being liquid. If you know enough about how crypto liquidity works, particularly globally, you're going to be a little bit more cautious about importing these liquidity practices into the U.S. financial services ecosystem, for example, for a bunch of reasons, or at least kind of wholesale without thinking about other implications. Um, but from my perspective, the key forces probably fall into these five buckets, and some of them have parts. So the first one is agentic AI interoperability, and this was always on kind of on my list as long as I've been doing this job and talking about these topics. It was sort of closer to the bottom, and over the last number of months, it shot up to the top. And then initially, people were saying, "Well, why are you doing this? This is too early." And now everyone is talking about this. And that is the need for agentic AI interoperability. Um, as AI agents are being inserted in a variety of environments, just because m- multiple industries are looking for efficiency improvements and other augmentation that are being kind of AI or predictive driven. Um, those AI agents increasingly need to interact with each other, pay each other, increasingly involved in trading activity, portfolio management, and other functions. It is relatively difficult for now for them to do so through traditional brokerage accounts and bank accounts and RIA platforms, etc. It is really easy, right? Sometimes too much so, which is where kind of controls and other topics need to come in for this industry to be responsible for an AI agent but it's really easy for them to interact with a wallet and tokenize data inside that wallet, which for purposes of this conversation is tokenized financial assets. It's happening already. AI agents pay each other using stable coins. There's a lot of wonderful kind of thinking and on that topic out already. Um, uh, and that will continue. So even if you disagree with all the other parts of the white tokenized narrative, I think the top-down secular force function for why AI agents that need to transact on behalf of institutions, funds, and individuals, increasingly so, and require machine-readable, programmable, regulated assets and infrastructure around it. And tokenization delivers that interoperability, of course, when done in a responsible way, and allows for agentic execution at scale. So That is a critical driver. The second driver is, call it TradFi and DeFi convergence. When you really, there are a couple of other elements here to unpack. One is there are use cases, tools around borrowing and lending, and custody, and collateral management. Again, whole separate conversation to drill down into that, that are available outside of traditional financial services in a way that is faster, cheaper, more transparent, more efficient than inside of traditional financial services. And so you can't access them, of course, unless your asset is tokenized, right? It's axiomatic and tautological, but that's so the interest in these applications uh, drives tokenization, right? You don't tokenize an asset. You don't tokenize a public stock just so you can keep it in your brokerage account. There's very limited interest to that, not zero, and because you still get some functionalities that in terms of data transparency and user transparency that you wouldn't otherwise. But if all you're doing is tokenizing something and putting in an account, that doesn't make a whole lot of sense. Um, Tokenizing it as a gateway to the DeFi functionalities and tools does. And so that's a critical driver for tokenization. And honestly, that should probably, that's obviously at or near the top of the list. The other part is more generational. It used to be that people would say, well, blockchain maximalists are the ones who are really obsessed about my assets, my control, my wallet, my self-custody and kind of, these topics. But I actually think blockchain maxis anticipated a generational shift where if you look at the 35 and under consumer segment, that kind of increasingly seems really, really far away from where I am, that you whether because of experiences that folks went through in their formative periods with financial and other financial crisis and other issues that undercut trust in institutions. To them, it is important to have access to self-custody and choice that extends beyond reliance and trust in institutions. And so the third kind of part in this category is that while DeFi is great for some people, institutions are still very cautious. There are not a lot of hedge funds out there that are willing to put their customer assets in the MetaMask wallet, right? There are exceptions, of course, and I'm sure people are going to throw them at me, but generally that's a thesis. And so what you need is still a crossover where you have kind of institutional oversight over private keys and the custody topic, and whether it's a broker-dealer custodian like tZERO, whether it's a bank custodian, I think the TradFi and DeFi convergence requires an element of that as institutions kind of grow in their comfort with on-chain custody. Regulatory and political clarity has been a big theme in the US in particular. Not here to debate politics, but whatever you think about anything else, the psychological shift around the how U.S. political and regulatory environment views digital assets has changed dramatically in the last year and a half, 2 years. And that has had a huge impact on how people allocate capital, how they develop product, how they engage in business activities. You don't need kind of me to convince you of that. Now, how durable that is, particularly if clarity doesn't pass, that's a different story. Politics are fickle, and so I'm sure we all want more to be kind of enshrined in legislation, but that's been a big tailwind. Multi-asset composability and efficiency. You hear about this being talked a lot. Assets, and this is where you get the liquidity in particular. Assets are typically siloed. You got public equities and private securities and derivatives of different flavors, crypto and stable coins, prediction markets, securitized real-world assets, largely siloed, largely existing in their own environments with siloed liquidity. If you give these assets a shared digital language, So you have multi-asset convergence. You unlock liquidity because you can trade from one asset class to another asset class very easily on without needing to cross regulatory or technological barriers. That drives liquidity. You can create new different types of products, the kinds of pair trading that are efficient from a user experience perspective, from a tax perspective, from and others that don't exist yet. And so you can create new products that are programmable and self-regulating. You collapse databases. You make the environment faster, cheaper, more transparent over time. Of course, in the beginning, things don't tend to cost a little bit more as you getting going, and the system is reorienting itself. And the related point, lastly, is cross-border convergence. What intranet did to data, this technology is doing to representations of value. Stable coins have been a great example of that, where we've seen the kind of cross-border movement of value that is far faster, far cheaper, far more inclusive, safer than traditional alternatives. And what happened to stablecoins has to happen to securities and credit and other financial asset classes from the perspective of capital formation and trading and custody. And so, of course, to do that, every country still has its own laws. That's not going to change. People talk about regulatory convergence for decades now, and nothing, and not much has happened. But the technology is capable of, again, doing to what stablecoins did needs to happen to the rest of tokenized regulated assets in particular, and to have when you collapse time zones, when you take your addressable markets, whatever your business you're in, and all of a sudden it's global by definition in financial services. That is a very different world. And regulated infrastructure providers like us or our equivalents in other jurisdictions working really closely in the sort of a follow the sun partnership model for now that allows for the seamless cross-border movement and formation and trading and custody of regulated capital is a significant promise for why tokenize. And so that's where we're sitting. I think I know uh, I'm not really here to as a long and by this point probably fairly boring commercial. But
Why don't we open it to the floor, Alan?
yeah, but we do sit at the intersection of all these forces, so we can stop here.
Yeah, that's I think that's a whole head full of stuff already. So anybody has any questions for Alan, just put up your hand, and Lou, feel free to jump in. You usually got, I think. Oh, sorry, did we lose you, Lou?
Yeah, no, I'm here. Can you hear me?
Okay, cool. So yeah, shout it. We got but two of you, Lou. Jump in, Lou, if you wanted to ask some questions. And convenient chat, you've got a question for Alan?
Yes,
Yeah.
hi.
There we
This
go.
is Dmitry.
Yeah.
Hi. I finally figured out how to turn on.
I'm sorry.
Okay,
Let me.
Oh,
Here you go.
go ahead.
Let me start. So thanks a lot for that, Alan. There was a lot going on there. Can you start? So you talked about this as a service. Who are your customers? Who's buying this as a service?
Yeah, that's a great question. So let me throw a slide on screen and we'll look at it, and I'll talk about it if I can find where my slides were.
That's easy. StreamX, we're your we're a customer.
Absolutely. So let's see. Up
That was
here.
absolutely fascinating. I enjoyed the overview of the industry. It gave me some good clarity on what's happening across the board and how the
Yeah.
institutional and the redefinition of digital finance is happening.
Yeah, absolutely. So can you guys see it?
Yeah.
Yeah.
So let me just go here. So if you look at the customer set, right, it really runs a gamut of, and look, it's not dissimilar. Think about traditional clearing firms, right? There are about 5,000 broker dealers in the U.S. Not everyone is a clearing firm. Not everyone custodies their own securities, let alone does it.
Sure. Are you starting with any one of these in particular, or taking more of a broader?
I think it's a broader outreach. Look, by definition, it tends to coalesce around some categories, but broker dealers and other financial institutions have been a big focus for us. Asset managers have been a big focus. Unregulated fintech platforms have been a big focus. I think,
Are you able to talk about
yeah.
uh, customers by name?
We can look. So we had some recent announcements. I'll talk about a couple of relationships. The relationship with Muriel Seabird and Streamex with the Goldie product is really important. Seabird is a large broker dealer with
A trailblazing firm.
trailblazing firm in many ways, have been a
$20 billion
terrific partner.
under assets.
Yeah, 20 billion under assets, have been a terrific partner for us. We have the infrastructure that I've talked about that they haven't developed, and it's a very synergistic relationship as they aim to bring tokenized assets to their customer base, generally, and in connection with a specific products like the Goldie product. Denari, you saw an announcement yesterday. They're another great partner innovating with tokenizing public securities in the US. As you know, it's a very rich conversation around how do you do with this? What's the role of DTCC? What's the role of major exchanges? Should it be led by the issuers? Should it be led by by other folks in the ecosystem without issuer necessarily
Sure.
initiating the tokenization process? Denari is tokenizing S&P 500, and we're partnering with them to provide custody and connectivity to the broader broker-dealer ecosystem. So
Okay,
that's
that's helpful.
yeah.
Thanks for that. My last question, and then I'd see we've got a couple hands up already. I'm sure there'll be others. Is obviously this is going to be a highly competitive field, and the traditional guys are going to come after it as well. And so, what are the advantages of going with somebody like tZERO? Obviously, you guys are crypto native, as opposed to a company like Robinhood, which is not crypto native, but now coming out with their own chain and has this massive customer base.
Yeah, look, Lou, it's a good point. I'll tell you, there are not a lot of there are not a lot of people out there that are offering this as a service, as an independent service to a range of B2B or B2B2C customers, right? When you look at Robinhood and you look at other folks, they generally have these products, but they're mainly driving their own marketplace. They don't
Oh,
exist,
of course.
right?
Look, they're not,
Right.
they're yeah.
Right.
We know
Yeah,
what
they're
they're
driving
solving
their
for.
own, yeah, they're driving their own marketplace. They're not offering these capabilities as a service to somebody who wants to create their own marketplace, but don't have the operational, regulatory, and technological capabilities. And I think partnering with blockchain protocol platforms, and we have a couple of folks on the line, including some great partners of ours, from Aptos, is provides additional kind of technological footprint on how you can develop this more broadly. But the point is, right, Robinhood is doing it to grow its own multi-million dollar customer, multi-million person user base, right? We are doing this to provide a service to other firms who want to be Robinhood, who want to be a Kalshi, right? We talked a lot about tokenized securities and infrastructure we provide for that. We are expanding into a similar infrastructure offering for tokenized derivatives and prediction markets. And
Yeah, that's already what now Robinsons are already making more off of that, right, than they are off
That's
crypto.
exactly right. And so if you want to be a Kalshi or you want to be a Robinhood, but you don't have that licensing because it's really rare and expensive, you come and and again you rent that infrastructure. And so I think that's a differentiation. And there's a lot to be said for being independent, Lou, by the way. And you're not captured by your own customer base, you're not captured by another institution. That matters.
Okay, terrific. Well, again, thanks a lot for coming. That was a super interesting talk.
Thank you.
Thanks, Lou. Dimitri.
Hi, Alan. Excellent presentation. Thank you. So I have a question. How do you manage in these situations when you tokenize something? How do you manage the crossover point between the real world that is being tokenized and the actual whatever is on chain or on your system? Like if I have a house and I want to put it tokenize it, so how do you manage this real world versus
Yeah,
virtual?
that's a great question. And look, this is, residential real estate is a particular topic. I've talked about it, other people have. I would love to have, I think what you're getting at is I would love to have a bring your own asset functionality. But right, that's when you can really turbocharge it and unlock more liquidity and trap real world assets. Um, the problem generally is in the US is that if you want to tokenize, if you want to fractionalize, tokenize, and securitize part of your house, for example, let's set aside everything else, kind of the other complexities. You got to go, like, there's a legal exercise involved because you're technically issuing securities, right? So there's some clunkiness that's involved there that makes it not as easy to say, you know what? I want to unlock liquidity in my house, and I want to sell at 20% interest to investors. And so making it easier from a regulatory perspective, and we've spoken to the SEC about it, uh, uh, is important. But I'd love to have a bring your own asset platform where we provide the rails to retail consumers. Now, what you're asking is, well, how do you do due diligence, right, effectively? How do you make sure that it's first of all your house, B, that it didn't burn down yesterday, C, that you are maintaining it, right? There are ways you could look, generally you're going to have probably, you can't automate all of it. So you're going to need to have some bridges between virtual and physical. And that requires middlemen, right? That requires people probably making sure that you are maintaining your house and kind of, right. For now, it's unavoidable when you're talking about a fundamentally physical asset that is represented virtually. So.
Okay, but then in this case, people who use your services are already institutions that have all of those paperwork done, and you basically take them on. Am I understanding
Yeah, no,
correctly?
exactly right. No, exactly right. I think when you're looking at more institutional portfolios, whether it's larger real estate portfolios or whether just securities period or credit or credit or something else, that's handled through traditional due diligence. Uh,
Right.
and and because you have regulated middlemen involved, whether they're broker dealers or digital transfer agent to others, there's a great focus on making sure that the asset is there, the disclosure is right, the disclosure is continuously right, not just at the time when somebody sells you something, and that and that investors are protected.
And then,
Thank you. I'm sorry, Dimitri,
yeah,
we
go
need
ahead.
to
Yes,
move
go
on.
ahead. Yeah,
Thank
all
you.
right.
RTQ is it? Next up, please. A question for Alan. Steve, do you want to jump in
Yeah, I
while
can go.
finding his...
Yeah, I followed tZERO with a lot of interest. I used to work with Patrick Byrne and was a fan way back in the day in the overstock times. And so when tZERO came out, I was really kind of electrified by what you've done to get the regulatory piece in order. And there's really only a couple of other companies in crypto who have done that, maybe 10, and only two or three that are offering this, kind of regulatorily compliant platform to other people, as a white label service, if you will. And so tZERO to me is a very exciting offering. And I wanted to know more about, how you see your competitive landscape of other companies and also the the sorts of clients you're getting now. Like it's just a very different world than it was. That every year is a different world in our space. So
Yeah.
this is a new world. So what's happening?
It's a good question because, Alan, you were talking about a competitive moat, weren't you?
Hmm.
Yeah, I mean, not everybody can afford
Like what's the trade? Is, who else is competing with tZERO in this space, and what kinds of companies are using your services?
Yeah, so look, great question. And by the way, thank you for your interest. Thank you for supporting the company. Going back to our origins and kind of Patrick's thinking around the various applications of blockchain technology across a range of use cases. tZERO was just one of them.
Yeah.
So competition, right? Competition is funny. I would say, look, I'm biased, but not only because it's my job, I do believe it, that there are very few other companies, actually, I think the number is less than what you cited, that offer the kind of
Right.
integrated turnkey end-to-end infrastructure service that is either white label or API based and that is meant to support a range of B2B or B2B2C institutional clients in their onboarding into the tokenization economy, just to be simplistic about this.
Yeah.
Um, you know, Look, I respect my competition. I'm not in the business of kind of talking them down gratuitously, and you got to understand and respect them, and then work your hardest to best them. And so there's one or two firms that do what we do pretty closely. I think their capabilities are not there exactly, particularly when it comes to connectivity with other broker dealers as a correspondent clearing firm that can offer on-chain custody to those BDs and their clients
Right.
where they can.
So,
Sure.
yeah, so you're saying it's really nobody else who can do this.
Yeah, dollar for dollar, right? I think we're in a very unique space. And then when you think about the integrated stack with tokenized securities, and then you couple it with what we're developing for prediction markets and crypto if clarity passes and derivatives broadly speaking, and so that infrastructure layer that becomes a further part of differentiation. I'll give you a third part of differentiation. Robin told me not to do commercials, but I'm going to do it anyway. The third part of differentiation is the intellectual property portfolio, and I'm only mentioning
Right.
it because you brought up Patrick, and
Yeah.
Patrick was very focused on that topic. And you're a lawyer, I'm a lawyer at heart and by training and whatever else, and so.
And IP really lends itself to this kind of transaction, so it's
Yeah,
really great.
exactly. And I'll tell you why it's important. This industry has developed in a more or less of an IP vacuum for years, right?
Yeah.
There's this open source philosophy that cut across the
Yeah.
whole space that IP just is not only non-existent, but an anathema to what you're trying to develop. But tZERO has a portfolio of 103 patents across 22, 23 families, very early patents going back to some of the ideation work that Patrick had folks do inside of Medici Ventures at the time and inside of tZERO. And we
Yeah.
acquired most of Medici Ventures patents.
Interesting.
And that is a significant moat, Philip, Robin, forgive me, going back to your point. And it's going to, as you have institutions coming in as investors, coming in as builders in the space, why should they get a pass on fundamental IP principles that they protected in their own industries, right? So you see this, it's changing. When we said, and part of kind of what was my focus after the leadership reset was looking at the at real enforcement or monetization opportunities with our IP portfolio and advancing the work that was done before. When you conclude that a market participant is violating your IP, your number one competitor is violating 5 of your patents, and you take action to do that, and we did that about 2 months ago. And people on X called me a cancer to the industry and like all sorts of wonderful things. Guess what happened 2 months later? Circle goes out and buys IBM's 680 patent families, block
Right.
the entire blockchain. I guarantee you they didn't do it for benign purposes, right? So the focus on the role of IP and whether it's a source of revenue from kind of enforcement or licensing or other activities, or just as a discipline and kind of a almost like a winnowing right function in the industry. That's watch this space, and that's another competitive differentiation that we have. So
Thank you. Thanks. Beautiful answer.
yeah.
Can I ask, thanks very much, Steve. Can I ask a question like on globalization? Greg, we were chatting about this yesterday or a couple of days ago. How do you handle this globalization thing? Because I mean, you've got, your compliance is different all over the place. It's changing on a regular basis. And yet we are a global technology industry, you're a global technology company, how do you manage that proliferate? Would you just select target markets and you just go for those in terms of where you are compliant and then slowly build out from there? Or just go to America because they've got so many people there, you don't have to go anywhere else for a while.
Well, that's a funny thing because the US in many ways, although it's, the financial services industry is ginormous, obviously, and is and is extraordinarily appealing. But US has been lagging in many respects when it comes to digital innovation. A lot of the products that we have seen abroad for years, only now, people talking about tokenizing public stocks, right, in the US and kind of what, innovative folks like Denari and others are doing. But been stuff been going on abroad for a while now, and so in a sense we've been lagging. I think politics and regulation have to do with it. But how do you expand your addressable market beyond the U.S.? Like every company wants a bigger TAM, right? That's just the answer. Well, how do you do that? It's like eating an elephant, right? Like one spoon at a time.
One bite at a time,
What we won't do is we won't say, this is a global product, this is a global marketplace. We're just going to operate as if it is without paying attention to, I mean, US laws, yes, we're doing this already, but other countries have laws and those laws have meaning. And I think the right way to do it is by partnering with best of breed infrastructure operators. So like tZERO equivalents in the UK. We have a terrific relationship with a company called Archax, and I have a very high opinion of them, and they have, analogous infrastructure in kind of the UK and the EU and some other marketplaces as well. And so you stitch together these global infrastructure operators so they can provide the rails for smoother movement on and off ramps and compliance and disclosure capabilities for these assets globally. I think you have to. Because again, I think what internet did to data, this technology is doing to items of value.
Brilliant. That's a nice one to end off with. I'm sorry, Dimitri, we haven't got time for any more. Lou, do you want to say a word or two before we close out? Okay, well, Alan, you're the man. Thank you so much. It's been absolutely fantastic. But we raced through that. A lot of information to integrate. Thank you to all of you for being here. Thank you, Alan, and thank you, tZERO. We'll give them a shill.
Thank you for having me on.
Like a
Thank you.
solid organization run by a solid person. So we're backing you all the way. Thank you so much, everyone. Have a wonderful rest of the day.
Thank you.